On today's market review, I want to talk about exactly why I took this trade, why I got the confidence to add on another position, and the pattern that I used to take it. So, let's get charting. So, off the bat, I'm looking at this really large move that happened between, I guess, 8:20 and 8:30. My idea here was that price has just taken that volume imbalance, really tiny volume imbalance on the 1 minute time frame. In my mind, I was looking at it possibly approaching the 50% level, touching it and then making its way back down. That was kind of really what I was hoping for at this point. Immediate, or rather large moves like this that happen, in a really quick instance, usually call for an immediate rebalance. As you can see, I switched over here to US 30. I noticed that there was an SMT divergence happening on SMT against ES and Nasdaq. So that kind of gave me a little bit of confidence. Also looking at the USD Dixie on this side, price was doing what it's supposed to and looking complete opposite to what we're seeing on the Nasdaq. So that's really where my mind was at. 50% of this fair value gap. I've marked out an order block that sits there. That is I made a mistake on my annotations. It was meant to say order block low, and that's the 4-hour order block. I was at this point expecting price to reach up into that and possibly make its way down, giving me a move down to 2,800 or 20,890 or so. So as you can see, trades have been taken at this point. The reason I took the trade early was because I'm more than happy to see it slightly go and push back up into that 50 level. I really wasn't looking forward to it. Rather, I was looking more for price to hit up into that order block low and avoid getting into the 50%, because that would really put me in quite a heavy drawdown at this point of the trade. The idea here is that price would be reaching into that previous new week opening gap that you see that's sitting on the 20,849 level. That was basically what I was aiming for. That's my bread and butter for this setup. And if I do see at any point price trying to break above that order block that I mentioned above, that will be more than enough reason for me to exit the trade and sit aside up until I get a better price. I placed my stop loss incorrectly at first. That is currently prices inside the wick of the order block. That is the order block low, which I annotated incorrectly, which also shows the importance of annotations. Is, you don't want to lose track of your drawn liquidity. So when you're looking at an order block that's being approached, be sure to try and annotate it as close as possible to the parameters of that order block, because price will at some point head into that. And if you're wrong by even a couple of points, depending on the type of move that you're in and how experienced you are, that could certainly hurt you. There's price going back, going up into that order block. Like I said, the order block is annotated wrong. It's meant to say order block low. So we are expecting the price to just come into that. So as you see, like I mentioned just now, price is entering into the bottom of that order block, respecting my levels nicely. On a better day, had I had more equity, I would probably add another order right in at this point where price is just continuously digging into that order block. See, at this point we're looking definitely at bearish order flow. I had a bit of a difficult day yesterday with trading. If you look in my previous video, I took a little bit of a loss, nothing too drastic really, and I stood yesterday. Oh yes, yesterday was the day I took the loss. I took the loss yesterday, and you know, it wasn't obviously amazing, but again, a loss is a loss. You take your losses, you move on to the next trading day or the next trading session. So not really too stressed out about this. So I'm looking at this trade now, and at this point I'm more than confident that, you know, price is going to show movement to the downside. The idea behind this is, as you can see, price since 9 p.m. or so, has been moving quite stagnant. It's showing not much movement as it digs up into this 15-minute fair value gap. When price does that, you know, you describe that that's basically it, almost pulling off a double top or triple top. They'll poke into the order block once, it'll poke in twice, it'll poke in 3 times, and usually around the 3rd time it will hang around in that order block, accumulating sells before it makes its move down onto the downside. I mean, you know, it's something that it repeats itself quite frequently. It happens often, so it's something that you can study, annotate, and at a later stage you can look back into your notes and review it when you're back testing price. It happens every single week, almost every single day, with every single currency or futures or commodity that you could trade. As you can see, I have not added a stop loss yet. The reason for that is because I'm just waiting for price to kind of settle in and give me an idea of if it's done poking up into that order block and 15-minute BISI. Another important factor about that statement is that if you pay attention to the time, it's about 9:21. And usually around this time things get a little bit sticky approaching the opening bell. So that's, the opening bell is at 9:30. So approaching 9:30 things can get quite volatile and price can shoot up and down, and you know, it usually isn't too much of an issue if you're observing, because ICT models generally teach us to stay put up until 9:30 opening bell. So you know, if you haven't entered a trade, good for you. You get to see everything unfold, and usually after the liquidity runs between 9 and 10 o'clock, things will get quite calm after that. That's when your cleanest entries happen, approaching 10:30, getting to 11 o'clock. So now I'm busy checking if I'm just looking for a confirmation that move into that order block was the final. I would hate to have put my stop loss up into that order block and have it ran immediately. So as you'll see, eventually I'll buckle and I'll end up putting my stop loss slightly above the 50% level of that 15-minute BISI. That ensures me that if price does get to that point, I do get stopped out. It's not too bad of a loss that I would feel fearful of jumping back in. So that kind of gives me a little bit of hope. At at this point where price is busy playing around my entry price, I would not want to see it poke past that wick that's just on the right of it, on the left of it. A slight poke into that could mean that sell side was taken. Even if it is intermediate, it could mean that it will push price further up into the higher side, the higher proportions of that 15-minute BISI, and that would make things a little bit risky. And that's exactly why I started to place my stop there, is because that little poke into that that sell side could mean a potential rally up into that 50. See, there's two relatively equal highs that are forming above, just above where price is, just above my entry. Those are forming the draw in liquidity for the next session. So we'd be looking at the draw and liquidity to be taken around about lunchtime. It's possibly already taken right now as I record this video. It's been about a few hours since market open. So as you can see, it's panning out really well. That new week opening gap is my level, so that is what I was most comfortable with. I set my buy limit order quite high above sell side liquidity. The reason I did that was because I do not want to take any chances. I'm not shitting around. It's always preferred to make money than not. So at every given point that you have that you feel any kind of way, and this is just, you know, for future traders and anybody really listening, take your partials, and those will pay for your commissions for the day. They'll give you a little bit of ticky cash. What do they call it? Tuck shop money. And that's usually a good feeling, especially when exiting the week. That's me done for the trade. A beautiful trade, if you ask me. And this is exactly why we like trading ICT. So if you guys really enjoyed the content, please drop me a like, drop me a follow, drop me a comment. Tell me what you would have done in this trade that I didn't. Tell me how you would have done it better. Tell me when you thought I was trading like shit. Tell me anything. I am more than happy to hear it out. Until next time, see you guys later. Keep charting.
Tick tock, thumbs up, got my trust in